10-second warning, eyes on the camera. Trade needs to be happening right now.
Welcome to Texas Capital Live. It's December 12th. We are live from Dallas, Texas. Another exciting show. My name is Steve Kennard. I'm the president of the AI Innovation Association. I'm excited to be joined for the first time as a co-host by Billy Rogers. Awesome to have you on the show, Billy. And we are also joined by our entrepreneur and residence, JBA, on this beautiful day, December 12th. Unfortunately, the market is a little bit down today. The S&P 500 down just under 1%. A lot of the discussion this week has been around the continued kind of unraveling of the AI trade. We've seen Oracle come down substantially. They're down over 3% today. And Broadcom, probably the biggest news in their earnings call, kind of guiding to some margin compression from their AI business. They're down over 10% today in the market. Those are kind of the two leading stocks everybody's been watching. But as our first story, we're not going to focus so much on the companies that are already public, but on what could be the banner IPO of 2026, and that is SpaceX. And this really started this week as kind of like a rumor that was making the rounds, people speculating on X, and then you had a hint from Elon Musk himself, basically saying, this isn't wrong. We're not going to not do it. So that was when things really started to take off, and you saw kind of the rumor mill start, and it started to go from a rumor, I think, to the expectation. SpaceX is one of the leading private companies right now. I think second in market cap, only to OpenAI. This would be an expected $1.5 trillion market cap that they would be pursuing, at least a $25 billion capital raise as SpaceX continues to expand. Obviously, it's space business, but what has also really started to become the growth story for SpaceX is Starlink. So we've seen deals already this year where Starlink is really going to start to go into a broader kind of retail play for their products. And eventually, most cell phones will have that option to connect via Starlink as well, which is a really cool development for that company. So huge potential for SpaceX. I want to just say right now, I think that SpaceX, since they are potentially targeting an IPO in the second half, towards the second half of next year, would be the perfect company to be the first IPO on the new Texas Stock Exchange. So I'm calling it now. I'm going to speak it into existence. I want to see SpaceX, a company that has invested so heavily here in Texas. You could be the first, you could be the banner IPO of the year, not just in America, but really in the world, and we can do it all here in Texas. So that's my message to Elon Musk, who may be watching right now. Let's have that SpaceX IPO happen right here in Texas. I think everybody would love to see that. I want to read a headline that made me laugh. It says, investors say Elon Musk's SpaceX trading debut will be the craziest IPO ever. And that I think speaks to the kind of like retail energy that you could see around a company like this coming to the public markets. Elon Musk is the CEO of 5 different companies. So that includes the Boring Company and, of course, the social platform X, now owned by xAI. But the only public company right now is Tesla, probably been the most successful IPO of the last 15 years that has massively outperformed. We've seen a lot of other companies that have come out with big IPOs, often trading lower after the fact. So Elon Musk, one of the rare track records of kind of bringing a cutting edge technology IPO that has then run up way higher from where it even was in its debut. I think SpaceX has similar potential to kind of be the next chapter in that story. Big development from Elon Musk, who's signaled a lot of reticence around having more of his companies in the public market. So this is maybe a change around that. So I'm excited to see SpaceX. I think that eventually we'd like to broadcast this show using Starlink. So maybe that's a goal for us.
I love it. I love it. Do you feel like this is right on time, early, behind what you maybe expected for this company? Or what are your thoughts there?
Yeah, I would say that it has gone way past where a typical IPO would have occurred, mainly because of Elon Musk's, like, just the name brand, the track record, all of the allure of Elon Musk. So he's been able to raise capital consistently in the private markets. And it's a good question also because it touches on the trend that we've seen, which is private companies staying private longer and private markets for equity trading becoming more and more liquid. So you have all of these different markets that people can actually trade these shares. They're just not available to the broader public. And that's really part of the issue that we're trying to address here in Texas is frankly, companies wanting to IPO and be in our public markets because of the regulatory scrutiny and the politics and just all of the nonsense that they're subjected to when they can stay private and raise money from all of these, giant private investment firms that have been built up over the years. So for that reason, SpaceX has I think been able to stay private much longer than anybody maybe would have predicted, but now is hopefully finally reaching a point where it can come into the public markets and benefit from that, frankly. Like not just that it's exciting for retail investors, but it's the right and good decision for the company itself. But I like the question. A lot of speculation has gone into this because it's gone on and on for years. Will SpaceX ever be public? And now, here we are.
Yeah, maybe they were waiting for the Texas Stock Exchange. I mean, you never know. It does feel like the perfect opening move for them, and I think it aligns with what Texas is all about.
Well said. They were waiting for the right time, which was to have the Texas Stock Exchange. So let's see that happen into 2026. That's my Christmas wish. All right, let's transition over. I think we have some exciting news from JP Morgan and Coinbase in the markets. What do you have to tell us about that, Billy?
Absolutely. So as of yesterday, JP Morgan announced that they facilitated the issuance of papers from Galaxy to Coinbase and Franklin Templeton. Now, this is amazing for quite a few reasons. JP Morgan is in the top 5 largest private banks in the world. And so tying their name to this, to me, says that, institutional adoption is happening, I think, faster than any of us in the industry expected, which is really, really exciting.
Yep.
I also think that it will drive mass adoption a little bit faster by seeing some of these, quote unquote, household names all come together. I also find that Franklin Templeton pairing with Coinbase is very interesting because I think Coinbase, when you talk about mass adoption in the broader market, they're a household name to anyone who's kind of dabbled in there, but Franklin Templeton, not so much. And so I think that those two going together is a really smart move on both halves.
Yep.
And then lastly, I'm so curious what Galaxy has in store. I really think that this is a signifier that they have some big things coming up, and I would just love to be inside the fold on what those are.
So we'll definitely have to keep an eye on this. It's worth noting the total capital raise here. I was looking into this. I think was $50 million, which is not a huge capital raise in the grand scheme of what Galaxy has in its portfolio. But like you said, it's more about setting the stage of kind of the preeminent banking institution in the world, frankly, JP Morgan, doing this and issuing this on a blockchain, Solana. And so that's really revolutionary to be able to show a public, because Galaxy is also a public company.
Right.
So you've got a public company, Galaxy, that already has access to those traditional capital markets, who's saying, now we're going to add a fundraising capacity directly on blockchains to kind of that capital stack. It's a game changer. The 50 million feels like a first test.
Absolutely.
And is so far being very well received. And as you pointed out, they already have two, banner name institutional investors in Coinbase and Franklin Templeton. This is kind of the next chapter in like the final de-risking of digital assets and the merger with traditional capital markets and how fast that's occurred. Because just a couple of years ago, Billy, we've been working together for a while. This would have been like the wildest, like April Fool's Day headline.
Absolutely.
JP Morgan doing commercial paper on Solana. It just would have been like this laughable thing.
Yeah.
And now it's front and center. And ultimately, the reason for that is because the technology adds value.
Absolutely.
To all of the different stakeholders in that process. So we are moving beyond the like, this is cool to make a headline.
Right.
And we're entering this makes business sense, and it's a critical part of how companies are going to fund themselves moving forward. Well done, JP Morgan and Galaxy. So cool. We'll have to try to have them on the show and talk more about that.
That would be great.
Well done, Billy, on that report. We're going to go into kind of the policy side of things because we've had 2 big pieces of news coming out of the White House this week. The first one I want to talk about is on AI regulation, and then we'll go into an executive order on proxy advisors, which has been an issue that we've touched on in this show before. Let's start on the AI side. And JBA, I wanted to play a video that the White House put out. It's about 2 minutes long, but I think it gives us an important perspective and kind of set the stage for this.
Mr. President, as you said, in keeping with your commitment to grow the American economy, create potentially millions of new American jobs, and maintain America's technological and military superiority in the years ahead, this is an executive order that orders aspects of your administration to take decisive action to ensure that AI can operate within a single national framework in this country, as opposed to being subject to state-level regulation that could potentially cripple the industry. David Sachs, your AI and crypto czar, has been one of the key players and key authors behind this EO. He can give you more of the granular detail, but the big picture is that we're taking steps to ensure that AI operates under a single national standard so that we can reap the benefits that will come from it in terms of economic growth, job development, national security, and technological edge.
And it's really the biggest industry that anybody's seen. I mean, it's taking off. And again, I believe there'll only be one country that really benefits, and it should be the United States. And it will be if we do this, if we're unified. We have to be unified. China is unified because they have one vote. That's President Xi. He says do it, and that's the end of that. You know, we have a different system, but we have a system that's good, but we only have a system that's good if it's smart. David Sachs, could you say a few words, please?
Yes, sir. So as you pointed out, we have over 1,000 bills going through state legislatures right now to regulate AI. Over 100 of them have already passed. 25% of them are in California, New York, and Illinois. You've got 50 states running in 50 different directions. It just doesn't make sense. We're creating a confusing patchwork of regulation. And what we need is a single federal standard. And that's what the CEO says, sir, is it basically states that the policy of your administration is to create that federal framework. We're going to work with Congress, like the chairman here of the Commerce Committee, Senator Cruz, and other members of Congress to define that framework. In the meantime, this EO gives your administration tools to push back on the most onerous and excessive state regulations. We're not going to push back on all of them. For example, kid safety, we're going to protect. We're not pushing back on that, but we're going to push back on the most onerous examples of state regulations, sir.
Okay, so two things I want to highlight from this video in terms of this debate, which has been going on really since the Trump administration started, this debate around the role of the federal government versus individual state governments as it pertains to AI. So the first thing is important leadership in this whole debate is coming from Texas. Senator Ted Cruz is the chairman of the Commerce Committee, where any legislation that ultimately touches on this is going to make its way through there. So worth noting, he's there standing behind the president, and the AI czar, David Sachs, is referring to his leadership in this race. So I'm glad to see that Texas has kind of a leading seat at the table in this. The second thing they mention, and this is an evolution, is there are certain issues, and the first one that they call out, one that there's pretty broad support around, is protecting children from AI-generated threats. So what we've seen in the past in terms of messaging from this administration around AI is more focused on the federal government should preempt all states in the area of regulation. And you've really seen partisan lines have broken down. This hasn't been a Republican and Democrat thing. You've seen most state-based elected officials say the states not only have a right, but an obligation to take action if their electorate, their constituents, believe that there are issues being presented by a certain technology. And so you've seen that in a lot of different ways in a lot of different states. And this is an evolution in that because the administration is saying, okay, there are areas where the states should be able to regulate, just like in anything else. And frankly, that's kind of the bedrock of our American system. You can agree or disagree with what your state may or may not be doing on something, but that's a major part of our democracy. We don't operate with kind of a singular executive order that preempts everything. At the same time, I do have a lot of sympathy and frankly support for the sense that they have of we cannot have thousands of different laws, 50 different regimes pulling companies in every which way and diminishing the ability of American companies to invest, build, and compete in a global race around AI. These are the two sides. This is the tension that you have in this debate. I'm glad to see the administration providing some more color around this, as opposed to where we've been before, which is more or less just been states shouldn't be regulating this. The states should and must regulate within the proper boundaries. Now, I want to note here one of the important aspects of the executive order is it directs the Attorney General to establish an AI litigation task force to challenge unconstitutional, preempted, or otherwise unlawful state AI laws that harm innovation. Okay, so that's a pretty broad mandate.
That is broad.
That harm innovation.
And that's a sticky term.
That's right.
Okay.
And so I think this is the most important thing, frankly, from this executive order, is that there is going to be a new task force who clearly their job here through potential litigation will be to bring more clarity to what is allowed or disallowed, what is constitutional or not. Where is the administration enforcing a vision saying the federal government preempts this? Now, they mentioned by name the states of California and Colorado, which doesn't surprise me because some of the AI laws that have passed there really have been the most onerous. Those states have kind of gone in a direction of more of like you have to ask permission for everything regime, and there's a burden on every AI company to prove that their AI is safe, which really doesn't mean anything, because safe is in the eyes of the beholder, and any bureaucrat can say this is safe, this isn't safe. And so that's where you've seen Texas already push back on that and say that is not something we accept for Texas companies to have an external bureaucracy in California permitting what can and can't be done. We're kind of the global capital here now for building out the infrastructure powering this AI economy. So the state of Texas has a big stake in all of this. We have passed AI regulation laws here that I think give a good framework for the administration to consider around what is appropriate for the state, particularly when it comes to children or sensitive private data, and retaining the right of the citizenry to have visibility and recourse ultimately if there's an abuse around their data. The fact of the matter is in AI, there is an incentive for these companies to get a hold of any data that they can and use it to train these models. That's not right or wrong, that's just an economic fact. Now, every company is gonna message and say, we have X, Y, and Z policies to mitigate, spying on you or stealing your data or whatever it's gonna be. But we have to be realistic that the economic incentive does not align with whatever those policies are. That's where a role for the government comes in. And ultimately, if there's an abuse, governments have to have a framework in place to do that. That's been a big focus on the Texas side is privacy concerns and the right of parents to have visibility and awareness of what's going on with minor children. So I'm hopeful that we're evolving here and going to a place where we start to get this into more concrete documents and orders. And so we remove a lot of the uncertainty and kind of back and forth from all these different entities. It's a big job for the Attorney General and this AI litigation task force, and expect this to pick up steam really fast.
Absolutely. And I think the line between regulation and censorship is very fine. And so they do have a really big task ahead of them. And I'm curious to see how it plays out. I'm also, even if they come up with these new terms of service that protect our data better, they still have enough data to train their models with that is all of our personal information, including that of our children, right? And so I do think that, I'd love to see new terms of service that protect my privacy and my data. But the reality is they already have what they need to train their models, whether or not they give that to us. And so there's a lot of, I think, unanswered questions here that I have. I think there's also a lot of eye-opening things that are happening. A lot of just day-to-day people aren't aware that our data is not our data. And so I think that this is groundbreaking in a lot of ways.
Yeah, and to your point, the order kind of specifically touches on this as it pertains to California and Colorado, where laws have already passed, and they characterize these laws as requiring AI companies to censor outputs and insert left-wing ideology. And so you have that kind of that targeting of censorship. You're going to see the same pushback from elected officials in those states, though, and say, now you're coming and censoring us. And so it becomes this political tug of war. Final thing I'll say on this is the order calls for the development of a national AI legislative framework, and that's important. Legislative, not just executive orders that can be overturned and changed. A legislative framework that would preempt state AI laws that stifle innovation. I think that's the role of Senator Cruz there, is ultimately to come up with legislation that's going to really settle this for the future, and companies can know what the rules of the road are and have the appropriate process, which is that legislative process. So I'm hoping this executive order is a right step in that direction. I think it is. I think it lays out that it is a pro-innovation focused executive order,
Which
and
is
not,
important.
not a remove every state law everywhere forever. I think that's a little bit where the concern has been.
Yeah.
So we're receding from that, where states are going to have a role here. Big job for Senator Cruz to land this plane, and so certainly we're rooting for him, and and that endeavor we'll be watching closely, and a lot more to come on this. But the ball is officially rolling forward at this point.
Well, my trust is in Texas.
So good to see Texas leading. All right, there was another executive order on an issue that's kind of been near and dear to us, and that's proxy advisors. And so, a law passed in Texas in the last session, touching on the kind of inappropriate influence of these proxy advisors. I'll read from the executive order itself, which I think rightly points out the issue. It says 2 foreign-owned proxy advisors, Institutional Shareholder Services and Glass Lewis, dominate more than 90% of the proxy advisor market and routinely recommend votes for racial equity audits, aggressive GHG emission cuts, and other actions that are similarly designed to advance politically motivated agendas. This has been the whole nature of this fight in Texas, is to say a private company can choose if they want to engage on an issue, if they have an opinion on greenhouse gas emissions or social justice. You're a private company, you want to publish that as part of your investment thesis. Okay, it's a free country in that regard.
Absolutely.
But where things get very problematic is when you have such market concentration in 2 firms that are not American, that a lot of passive investors that don't vote their shares at these shareholder meetings kind of farm that out to these proxy advisors who come back and say, well, you should vote yes here, you should vote no there. And in any logical world, those proxy advisors would do kind of the bare minimum to just protect your financial interests in a company. They wouldn't be overtly lobbying for, frankly, some kind of political angle. Most famously, these 2 entities recommended against supporting the compensation package for Elon Musk, which ended up passing with more than 70% shareholder support.
Right.
So a lot of egg on their faces there. In addition to, there was really no coherent argument as to what really was the basis for that. I think was very poorly done on both of their parts, and really just it was a mask-off moment. That the force behind these proxy advisors is not to protect the fiduciary interests of the investors. Now, look, at the same time, you have a lot of firms that are managing funds, mutual funds, whatever it may be, and they say, we don't want to get into the voting shares business.
Right.
That's why you have a proxy advisor.
Right.
Because they just want to focus on administering the fund in the way that they've presented that. And I think that's fair. So all of this is the background going into this executive order to say we've gotten to a point where the current situation is untenable. The report points out that this was a campaign promise that President Trump made, so this didn't just come out of nowhere. It was specifically mentioned as part of that, and it points out as well that this is damaging to the broader American investing kind of class, the retirement investing people that often have no idea. I think if you went around on the street and asked 10 people, do you know what Glass Lewis is? You're going to get 10 blank stares.
Exactly. I was thinking the exact same thing.
Yeah. And then you say, well, do you have a 401k or an IRA or any mutual fund you own? Yeah, I do. Well, then Glass Lewis is voting on your behalf.
Right. Yeah.
And so that's the amazing thing that's going on here. Now, this is an order that is going to direct the Securities and Exchange Commission to review and, as appropriate, rescind or revise all rules and regulations related to proxy advisors. The big one here, I think if we cut to the chase of where this might be going, is whether or not there's going to be a change at the SEC and other entities to require these proxy advisors to register as investment advisors. That brings them under regulatory oversight. Right now, they do not qualify as advisors, which to me is ridiculous because they are literally advising on votes that directly impact the performance of an investment. So that's ludicrous, in my opinion, that they operate completely outside of any kind of framework. And I think that's at the heart of what this order is about is, hold on a second. Before we go getting in an argument of these shares should be voted this way or this, I don't think the government wants to get into telling people
Right.
how to vote their shares.
Right.
Okay, but we can't continue with the current situation that's untenable.
Also true.
So hopefully this order moves us into a place of saying, what are we going to do about this?
Yeah.
The arguments have been had at this point, right?
Right.
So we need to go into some new era. I would like to see a U.S.-based proxy advisor come out of this. That's my call. I
It
would like to
should.
see a Texas-based proxy
yes,
advisor
absolutely.
come out of this, because this is beyond ridiculous that major public Texas companies
Right.
are being overseen by these far-left radical European entities that have no interest in the actual performance of the company. How are you going to come to an oil and gas company and say the number one thing we're interested in is reducing your emissions to zero, which is another way of saying putting you out of business?
Right.
It's a terrible investment strategy. It makes no sense. So I commend the administration on this executive order and look forward to seeing kind of the next steps from that and how we continue to move towards something that is more what I would call common sense based. I'm going to move to our next thing, which is back to kind of the emergence of digital assets and the merging in with traditional assets. And that is BitGo, a long-time custodian and trading exchange for Bitcoin and other digital assets, has secured regulatory approval to become a bank. So upon final approval,
This is fascinating.
this is really a major announcement
Yeah.
because this has been, now years ago this started. I think Kraken was the first, if I recall, the first exchange
right.
to say they wanted to become a bank just like any other bank. Where
Right.
you could come and deposit your dollar. You don't want any Bitcoin, that's fine. You can use
Right.
this as a bank. And then you have kind of this new technology offering if you're interested in that, which makes a lot of sense.
Absolutely.
They could never get those approvals. There was never any real explanation given in the past as to why that wouldn't be allowed, since they were perfectly legal US-based companies. And so a lot of that nonsense is being removed now. So it says the charter will allow BitGo to custody digital assets and certain non-deposit financial assets and offer regulated crypto-related services without state-by-state approvals. That's been the big headache for all of these
Yes.
different companies around providing financial services is all these different states and the
Yes.
tug of war around that. And so this is really huge. This is from the Wall Street Journal. It says the OCC confirmed in a press release that it has approved the National Trust bank charter applications from BitGo, as well as 4 other crypto firms, including Fidelity, Circle, which is the stablecoin that IPO'd earlier this year, Ripple, who also had a big announcement around that this week,
Yes.
and Paxos, which I was not aware of, but they have for a long time been a firm involved in trying to bring digital assets into the traditional asset sphere. It mentions here, as the Trump administration moves to incorporate crypto into mainstream finance, a host of crypto firms have applied for bank charters. The president's embrace of digital assets has also fueled a surge in deal making in the sector. And so that's this whole narrative, I guess, of we are removing
Yeah.
the really the opaque and just destructive lack of clarity that we had in the past around what traditional mainstream finance companies can do
Right.
versus digital assets. And I think those two categories are just going to go away.
I agree.
And
I
it's
agree.
just kind of, this is all under the umbrella now
Yeah,
of
absolutely.
financial services.
I agree with you.
Right. And so huge day for BitGo. Big headline, this this week, and will be very interesting to see. This hasn't gone live yet,
Right.
so it'll be very interesting to see when these banks actually go live. Do we see deposits moving?
Yeah.
All of a sudden, you have this big push on every other bank.
I'd be curious to see if they buy up a branch or if they really
Exactly.
have a brick and mortar and kind of lean into that traditional sense to allow people to feel more comfortable with it, right?
I think that'd be a lot of fun to bring a lot of people in.
I think so, too.
Is have that brick and mortar. I like that idea, Billy.
I think so too. I think you pointed on something really important too, is the traditional finance and digital assets are going to kind of merge into what we just call our day-to-day finance. And I want to call out that that's normally how I explain digital assets to people who have no idea what it is your money's not your money anyway, right? You log into your app, you see it online. It's somewhat of a digital asset as it stands right now. Now, they're not the exact same thing, but I think to wrap your mind around the fact that you're not holding all your cash anyway, is an important point. Oh,
Yeah.
That was hard to get out. But they are very different, and I think when it comes to safety and validity and all of that, wildly different things. But I do think what you're saying is true.
Yeah.
We will at some point no longer differentiate between the two.
Yeah, and you can see a world as a traditional bank is being run by a BitGo or Paxos or whoever it is, where you want to make a payment and it's like, okay, you can do wire transfer and it'll take a long time and cost $30, or you can have the instant one that costs a fraction of a penny.
Right.
You don't have to call the one digital assets and the other traditional. Just pick the one that serves your needs better.
Yeah.
Right. And that's ultimately what's going to win at the end of the day. So cool story. Let's go kind of out of the digital asset world and some news this week from Lululemon, a company we've talked about before. What do we have going on at Lululemon?
Yeah, Lululemon's CEO just announced that he is stepping down, and at the same time, their shares rise 9%, which is fascinating. I think normally we would expect the opposite, right? Where the CEO announces he's stepping down, their shares or stock drops suddenly, and everyone's kind of in a scramble. But it almost feels like people were waiting for this to happen or wanted it to happen. And I'm not a Lululemon girl. I don't believe in athleisure for my specific lifestyle. But I do find this very interesting because I see Lululemon on the majority of people that run around Dallas.
Yeah.
So I find this to be wild. I also think it's interesting that he announced it on the same day that they posted their fiscal third quarter earnings,
Right.
which were way better than anyone expected. So there's a lot of under the hood things happening that I think, again, would love to be inside the fold.
Well, I'm glad I learned the word athleisure, so I learned something today. Because the Lululemon is well outside of my typical wardrobe, but it's been an interesting kind of barometer for the broader health of the retail sector.
Yeah.
And the sort of unraveling of the Lululemon story, because for some years Lululemon was like a Wall Street darling. I mean, it was a big stock.
Absolutely.
That unraveling really accelerated with the tariff discussion in the new administration. Over the past year, the stock's down almost 49%. So it's been a rough year for Lululemon. At the same time, and I think what they've been trying to message as a company and the retail sector more broadly, is healthy brands are cash flowing, pretty stable businesses. A lot of times you have people that have a certain brand and they stick with it. And Lululemon has been able to show some of that.
Yeah.
Also growth outside of the U.S. So they've been kind of trying to pivot and say this tariff thing is bad, but we're growing in all these other countries. And the market wasn't really having it. Now they come with these quarterly earnings, as you said, and exceed expectations. And finally, they're getting a bump. This may be like the first good day that Lululemon's had this year, because it's been a rough year in terms of stock price action. And the CEO making an exit. So I think that's they're going to try to turn a page here.
Absolutely.
And see if the ship can be salvaged, because there is a cash flowing business underneath this. And we had at one point shared a research report that Perplexity AI had prepared. And it was interesting because they kind of take the emotions out of Lululemon, do you like the pants or not? Have they been in the headlines? Because all that's been bad. And they just said, look at the cash flow of the business. How does that look? And is it valued reasonably as, compared to that?
Right.
And just on that basis, there was a strong argument to be made hey, this is a pretty solid underlying company here, but they've just been beat up and beat up and beat up.
Right.
It's got to be a little disappointing as a CEO. You leave and then the stock immediately jumps on the announcement of your
That
departure.
is a little disappointing. They did normalize the $100, legging. Is that what we're calling it?
Yeah.
That sounds not
They did
right.
the same thing with leggings as Starbucks did with coffee.
There you go.
You know,
That's so true.
They sort of psyoped everybody into paying more than it was worth, but
Right, and all
Good-
the other
kudos
brands
to them.
followed. Like now you see it's $100 for a pair of leggings that are comfortable and soft, which is wild, but normal at this point. And same thing with Starbucks, right? It's normal to pay $6 for a cup of coffee and nobody bats an eye at it. And so there is this, I think, leadership that they've brought to the market and making it okay to charge more for what the mass demographic of people that wear it would call, an upper scale brand.
Yeah. Yeah, it's an interesting story, for better or worse. I think will continue to drive headlines because they're one of the larger, and at least in that subsector. So we'll see how this was third quarter, of course. So we're going to wait for fourth quarter and see how the holiday season goes.
Very curious.
That's kind of the make or break for a lot of these retail brands. All right, I want to pivot to Dallas-based company, Invited Clubs, Invited Brands. This was formerly ClubCorp, the operator of country clubs traditionally, and then they have expanded into all kinds of private clubs. So they got one here in downtown Dallas. They've got downtown Houston. They've even got a club inside the University of Texas football stadium.
Oh, wow.
In Austin, so kind of interesting. Invited was a company taken private in 2017 by Apollo, one of the larger private equity firms, and is now reportedly eyeing up to a $3 billion IPO. Now, this isn't confirmed. This is kind of back to that rumor mill. But there has been a lot of recent interest in this kind of sector, a lot of volatility. We've seen Topgolf, another Dallas company that had been bought by Callaway, the manufacturer of golf clubs and golf clothes, and had gone through an expansion and then kind of a retreat. And now Topgolf is being spun out and sold to a different private equity firm.
Yeah.
And so you've got kind of activity going on in the market. Now, $3 billion is a big... would be a pretty sizable, I think, new high watermark for this industry.
Yeah.
You know, most country clubs are totally private.
Yeah.
And so this is kind of a differentiated model. It's hard to think of a real comp for Invited. I still kind of think of them as ClubCorp. I'm sure Apollo wouldn't like that. I still think of it as ClubCorp.
Not their favorite statement.
But this, I think, is just a really interesting, differentiated type of IPO.
Yeah.
Could be an interesting one for the Texas Stock Exchange as well, because a lot of some of their big kind of marquee properties are Texas based. My neighborhood is one of them. We live less than a mile from an Invited course, which they have materially renovated and made, much nicer.
Yeah.
And from what I can tell, and maybe this is a little bit leading into this IPO, this is just one club, of course, but from what I can tell, the activity, the membership, the engagement has been a lot higher because they upgraded everything, made the course nicer.
That is
so
nice.
I think that's been kind of the process that this has gone through. Went private in 2017. Most every club has been remade, upgraded. It's almost partially like that Lululemon story.
Yeah.
Increase the pricing, power there. And so let's see if this kind of goes from rumor to reality. Now, the take private deal was at $2.2 billion. So to come back out at $3 billion here, 7 years later is maybe not an exciting return. So they'll be testing the market to see if that makes sense from an investment and exit
That is
perspective.
interesting. Is this who owns the Tower Club downtown?
Yes.
Okay.
Yeah. So Tower Club in Dallas is part of Invited, and then the big club they have here in town is Brookhaven. That's 3 golf courses.
Yeah.
Yeah, and that's up where the headquarters building is there on 635. So very much a Texas company, though it's grown nationally and they have courses all over.
Right.
But it is a little bit Texas weighted. So I thought it was interesting to bring that up, kind of make people aware, and something we'll certainly be following because we want to see more Texas-based companies IPO and give Texans an opportunity to invest in Texas companies. So we'll be rooting for Invited and in whatever direction they take on that. This wraps us up for this episode of Texas Capital Live. Thank you, Billy, and JBA for the commentary. Another exciting week, and we're looking forward to heading into Christmas. We'll see you all next week.